Welcome back to our Talking Economics series, and joining me today is the Commonwealth Bank's senior economist, Belinda Allen. Belinda, thanks for joining us.
Thanks for having me.
The RBA has held the cash rate this month at 4.35%. Can you take us through the thinking behind that?
Certainly. So at the June board meeting, as was widely expected by economists and the market, the Reserve Bank held the cash rate steady. We thought going into the meeting it would be a straightforward decision, and it was, albeit the Reserve Bank still seems to be flagging they are concerned around the inflation outlook. They have noted that inflation's only reducing gradually. It's proving persistent at a higher level than what they would have expected. And interestingly, the Reserve Bank is certainly ramping up the view of how uncertain the outlook is. And one way you can see that is they use the word uncertain 8 times in June compared to only 7 times in May. So interest rates held steady again, although the Reserve Bank, as I said, seems more uncertain, particularly around the inflation outlook. But at the same time, they're certainly looking at data including consumer spending and the labour market in more detail, but inflation is certainly at the top of their mind.
So the August board meeting is potentially a live meeting based on how inflation data lands, yes?
That's right. So we do have 2 more pieces of inflation data before the next board meeting, which is in August. So we do get a monthly CPI print for May before then, but more importantly will be how the June quarter inflation numbers print, and that is not released until the 31st of July. So if that number proves to be uncomfortably high, then the August board meeting could be live for an interest rate hike. That's not our base case, but we'll have to see the data. So at the moment we expect, and I'm talking about trimmed inflation here, not the headline inflation measure, we're expecting a print of around 0.8, 0.9%. So if it's above that, particularly north of 1%, that August board meeting could be live.
So just released the CommBank Household Spending Insights. What does that show in terms of consumer spending?
So the CommBank HSI for May did lift by 1.1%, and that came after a 0.8% fall in April. Now, the numbers have been volatile over recent months, and that's really been driven by the changing timing of Easter. So Easter this year was in March for the first time in 2016, so spending patterns have changed. So the best way to look at this data at the moment is by looking at the average over the past 4 months. And when we look at that average, monthly spend has increased by just 0.1% the last 4 months. So that's quite soft. And we're continuing to see in that HSI data that consumers are continuing to wind back spend on discretionary items. So recreation, hospitality and household goods have been particularly weak, to continue to devote more spending on goods and services where prices are rising. So items like utilities, transport, insurance continue to grow at a much faster pace than the fun stuff, the discretionary items. So overall, even though May looks strong, on average, the data continues to point to pretty soft consumer outcomes in recent months.
And finally, as we close out the financial year, what are the key data points we'll be looking out for? And in terms of interest rates, how do you think that'll go for the rest of the calendar year?
It's a really great question. We've already pointed towards the upcoming June quarter inflation print in late July. That is probably the number one print we're looking at the moment. But secondary to that, we're also looking at labour market data. The unemployment rate remains at 4%, which is still low compared to pre-pandemic of above 5%. And also one other source of information we're looking at is how are consumers going to respond to the income tax cuts and electricity rebates that all come through on 1 July. The intent at the moment from consumers seems to be to save rather than spend. If we do see a stronger consumer response, then that also makes us question our view on interest rates. At the moment, our central case scenario is for a November rate cut by the Reserve Bank. But given the uncertainty around inflation, the uncertainty around consumer spending and the labour market, the risk now sits with a later start date to our RBA call.
Great insights. Belinda, thanks for your time.
Thanks very much.